Thank you.
Great, thank you very much, Felicity. Can we go to Rushanara, please?
Hi, good afternoon. And can I just echo, can you hear me?
We can, yes, thank you.
Can I just echo what other colleagues have said? Thank you very much for all the work that both your organisations are doing. I wanted to pick up on the issue around customer care and treating customers fairly. And just starting off with the fact that the £500 interest-free overdraft, obviously that's very welcome in that package. It's for 3 months. Perhaps, Mr. Woolard, you could kick off by setting out just a few, address a few points, which is, will those, at the end of that period, will compound interest be charged? And how will you ensure that it doesn't affect credit ratings? Obviously, people that will make them worse off. And are you confident that the repayment arrangements in the future won't keep won't get people into difficulty further down the line?
Hello, Chris? Have we lost Chris?
He's still muted.
Oh, Chris, you're not coming through. Are you muted on your computer by any chance? Chris is still muted, I think. Is that?
I think he's dropped off the call. It's the video's frozen.
Oh, is it? Sorry, I couldn't see it where I am. Well, could we pass that perhaps over to Sam while we or Sarah whilst we try and find Chris?
Sure. We have to, I think, defer to Chris on the roll-up question. But I think your question goes to the heart of treating customers fairly, both from a individual borrowers and an SME borrower point of view. And I think the one point I would make from the prudential end is that, of course, there are the points around senior managers regime and whether cultures have changed within banks, but there's also, I think, strongly in the minds of people running banks that by the time we're through all of the misconduct which kind of was unearthed by the last crisis, it's probably going to have cost the banks about £100 billion here in the UK. Yep. And I think that concern and that worry about making a misstep may slow things down a little bit, but I think it ought to reduce the risk of a kind of further wave of misconduct on the kind of scale that we've seen in the last crisis.
So we shouldn't expect to see this. I mean, in terms of implementation, making sure that compound interests aren't charged, and also that and these are not done in a sneaky way. One of the problems, as you know, we've raised it in the committee in the past, is that things have crept up later and agencies have had to respond after the event. And also this issue around credit ratings, people will be quite anxious about that. And also, can I just again, we'll come back to Chris when we can get him back on. Payday loans and the buy now, pay later loans are not included in the package. Do you have a view on that?
Well, I mean, on the former point, I think it'd be very unwise for somebody in my position to offer you 100% guarantee that everything is going to be done perfectly by all of the banks in this. I think it's inevitable that a few things will go wrong, but I am cautiously optimistic that they are approaching it in the right spirit. I do genuinely believe that is the case, because remember, the people making these judgments down on the front line are experiencing COVID-19 like the rest of us, and I think are quite well motivated to do the right thing. But on top of that, that shadow of the huge costs of previous misconduct will probably mean the controls are a bit better, and the both the incentive and the likelihood of doing things wrong are lower than before. On the exclusion of the payday loans, I myself don't have a strong prior on that. What I do know is that some of those lenders which are just outside the margins of the banking system, which we oversee from a prudential point of view, are experiencing a considerable strain. Part of that because their normal sources of funding themselves have dried up somewhat, and it may be that the decision to leave them out was also predicated by a view of what was necessary to help that industry keep running. But I am speculating a bit there, I confess.
And just on as you know, in this committee, I've raised a number of times the issues to do with mortgage prisoners and the affordability test, which switched to a relative test thanks to the work of the previous head of the FCA and others and the team. But I just wondered if anyone could clarify whether mortgage prisoners would also be allowed to take the 3-month payment holiday, because they're obviously they were in a difficult position in the first place. It's over 100,000 of them, and COVID is going to affect them just like the rest of us.
Well, I confess my very strong assumption is yes, but perhaps I could confer with Chris after the session. If Chris has a different view on that or knows something I don't know, get him to write in and respond on that point.
Great, thank you. Do we have Chris back, perchance?
No, I don't think we do at this stage, unfortunately, but I think we're working on it.
Okay. Well, I'll just keep going and see if others can answer.
Well, I'll do my best.
Thank you so much, Sam. So overall, just in terms of your overall assessment, I know it's been a short period of time, but do you feel that the treatment of customers by financial firms has been satisfactory since the outbreak of coronavirus?
No, I think so far it's been okay.
Yeah.
But in many ways, the rubber has not really hit the road yet. It's only just starting to happen. So the true test will be, I mean, one piece of evidence Sarah mentioned, which is useful, payment holidays, they have been granted, the accounting's been handled sensibly. As far as I can work out, that's all being done in a way which is perfectly sensible and fair. It, of course, involves a degree of risk for everybody, for the banks from a prudential point of view, from customers, from their own finances point of view. But that seems sensible. But with these next wave of things to come, particularly the C-bills and how that plays out, and several members of the committee have mentioned GRG. I think nobody wants to see another GRG. But will that work out or not? I think we'll have a much better feel in about a month or two's time, to be honest.
And can I, perhaps for both of you, where do you see the emerging challenges? To some extent, I'm asking you to I suppose, anticipate where those emerging challenges are. Certainly from our caseload as members of Parliament, we can see some of those signs. We're pleased where the government is responding to some of the feedback, but some people will say that it will be consumers, that are vulnerable consumers and customers who could still be hurt despite these programs. For instance, access to banks and post offices and so on still are going to be even more challenging for them. In some areas, the services are not going to be available. But can you see areas already that you're concerned about, and how well placed do you think the system is now to be able to respond quickly to correct them, whether it's the FCA and others, leaving aside government for a moment, in a way that it failed to do with GRG and other scandals?
Well, I think I would point to two. I'm afraid they're both rather obvious, but they may still be right. The first one you mentioned, of course, customers who are already vulnerable, in many cases will have their problems exacerbated by what is going on. And so I think that's likely to be an area in which the committee may well want to continue taking a close interest. The other one, though, is more novel, which is none of us yet know how well this bridge is going to work and whether it will succeed in bridging very large numbers of companies, both large and small and medium-sized, through this downturn. We hope that it will, but it's of course possible that it doesn't. And if it doesn't, looked at from a prudential end, that's potentially a pretty big deal, both the impact on the banks and the impact on the insurance side. And that's the one which is, I think, a more sort of unique and unusual circumstance because of the very significant speed and severity with which this issue has arrived compared to what we normally experience in a recession.
Yeah. Okay. Do we have Chris back, or we're not going to get him back?
No, I think
Sarah, did you
time to move on. Is Chris with us while we're on? No, not back yet. We'll still work out. Can I